I've been investing in the northern property market with my wife for the last decade. And 7 years ago, we started Lifestyle Property People to help others do the same as well. We've now purchased nearly 400 properties in the north for ourselves and for our clients. So we know a thing or two about investing in buy-to-let property. So who's this webinar for? I'm going to read out these statements and I want you to identify which of them most resonates with you. I want to invest in property, but I'm worried about making a mistake. That's the first one. The second one is, what if I buy the wrong property? The third one is, I want to learn from other people's mistakes. I don't want to lose money. Should I buy an existing property or a new build? And what do I need to look out for when investing in a buy-to-let property? So can you guys just type in the chat box which one of these most resonates with you so I can understand who we've got on the webinar? So just type in 1, 2, 3, 4, 5, or 6. Which one of these most resonates with you? Perfect. Okay. So I'm going to go through these, and like I said, we should take about 30 or 40 minutes. We've got some time for questions at the end. So the first one is not having a specific strategy in mind. Most people decide on the property first, and then they try to figure out the rest after they've bought it. However, the property needs to fit the strategy. So what do we mean by strategy? Well, we need to consider, firstly, what area are we looking at? The north, the south, maybe even abroad. Secondly, what size, type, and price point are we looking at? Is that 2-bedroom leasehold flats in London, or maybe 3-bedroom semi-detached properties in Sheffield, for example? The third is, how will you be finding these properties? Are you going to be buying through an auction, maybe using estate agents or another method? The fourth is, how much refurb are you going to do? Are you willing to do? So there's advantages and disadvantages to both options. If you do less refurb, then you ultimately have a ready to go investment and you can start earning income from it almost as soon as you've bought it. On the other side, if you do a bigger refurb, then you know that all the work has been done and maybe it ends up being a bit more hassle-free for you in the long term. The fifth is obviously who to rent the property to. Do we rent them to students? Sometimes you get higher rents for students. Do you rent them to benefit tenants where we have fixed rents because the council pay them? Or maybe you rent them to families, in which case you have 2 responsible adults. So you don't have maybe higher rents, you don't have fixed rents, but you have a more responsible tenant in place. The sixth and final one is, how involved do you want to be with the property? So do you want a set and forget strategy, which you can do on the side of your current job? You just invest in the property and put it aside. Or do you want more of an active involvement, an active investment that needs you to manage it every single day? The property will vary depending on the strategy. So it's really important that you know what your model is before you start. I've just spoken to a client 2 days ago, and they were saying that they were thinking of buying a property to invest in the serviced accommodation model. For those of you who don't know, serviced accommodation is basically Airbnb. So they're going to buy a property and they're looking to rent it on Airbnb. And there's a couple of things that they weren't aware of about this strategy that I helped them to become aware of. The first is that there are some regulations coming into that industry. So we really need to be careful about the property that we're buying and making sure that any current property purchase is going to stand up to any future regulations that come through in terms of renting on Airbnb. The second thing is understanding that the property that you buy, if it's going to be on Airbnb, more than likely has to be in a slightly different location to if you're renting it out to a family. So you might say, well, I'm going to rent it on Airbnb and therefore might have to buy in the city centre because that's where most people want to stay. And it might not be conducive to changing that strategy in a couple of months or a couple of years' time if things do change. The second thing you need to look out for is not holding a long-term mindset. So in 2008, when the housing market dropped into a recession, average house prices were down 16.6%, which in some areas meant a drop of hundreds of thousands of pounds. As you can see on this graph, the property market always tends to recover. So it would be crazy to sell while the market was dropping, but a lot of people did. So this is a graph showing the average house prices in the UK from 1967 until 2021, and the prices have continued to increase since 2021 until now. But in 2007, 2008, as you guys know, we had this dip. And a lot of people sold during that dip. And if you sell during that dip, then you are going to lose money depending on where you purchased the property. But if you don't sell, and if you didn't sell at that point, then your house would probably have increased in value in the preceding decade. Remember that losses are only crystallized when you sell. So if you don't sell when the market is down, then you won't lose. What's more is that when the market does fall into a recession, what happens to rents? Do they go up or do they go down? What I want you to do is in the chat box that you've got in front of you, can you type up if you think the rents go up, or down if you think that the rents go down during a recession? Up. Yeah, that's correct. So during a recession, when house prices start to go down, what typically tends to happen is that people can't afford to keep their properties. And if they can't afford to keep their properties, they have to live somewhere. So it means that there's more people that are looking to rent. And if there's more people that are looking to rent because they can't afford their mortgages, it means that there's more demand for rents. And if there's more demand for properties, then rents tend to increase. Now, this one is one of the main reasons I hear when clients speak to me, and they always say, if I buy a house for £100,000 with a mortgage, then I probably just need about £25,000 to get started, right? Well, that's not quite the case. There are some hidden costs that you need to factor in, and some of you that have seen some of the presentations that I've done before, you'll have seen some of these before. So not considering the hidden cost is one of the main mistakes that people make. So here's an example of the costs that are involved when purchasing this 3-bedroom semi-detached property in Leeds. So if you're purchasing the property for £160,000 with a 75% loan to value mortgage, you would need a deposit of £40,000. So you get a mortgage of £120,000 and then a deposit of £40,000. On top of that, there's some legal fees to pay, which is usually in the region of about £1,500. And if you're purchasing through a limited company, you'll also likely incur some additional fees as well. So these are fees, for example, for independent legal advice, which is to confirm that you understand that even though you've purchased it in a limited company, you are still 100% responsible for the mortgage. So there's some additional legal fees there. You'll also have to pay the mortgage broker fees. This is about £500. And then you also may have, depending on the mortgage product that you choose, mortgage product fees and also valuation fees as well. On top of that, you'll then have fees for the survey, which is typically around £500, obviously depending on the type of survey that you opt for. And if you already own your own home, you'll also need to pay the additional 3% stamp duty, which works out at about £5,500 on this £160,000 property. You'll also require about £8,000 for refurbishing the property, and depending on the size of the property, you'll also need a project manager to manage it too. So in total, we have a cost of £8,000 for refurb and project management. And then when you come to let it out, of course, you'll need to pay the lettings agent a lettings fee to market the property and then vet the tenants before they move in. And on top of these numbers that we have over here for setting up the investments, we also recommend that you keep a buffer of at least £1,000 per property for repairs. Now, if you're doing a refurb like we are in this case, maybe you won't need all £1,000 of that, but it's never a bad idea just to keep a little contingency pot just in case. So on the left-hand side, like I say, we've got all of the one-off costs. And then on the right-hand side, we have the rental side of things. So on the rental side, as well as the interest that we'll have to pay on the mortgage, so the mortgage interest, you'll also need to pay management fees to the management agent, unless you're managing it yourself, which I wouldn't recommend. And then also you'll have to pay insurance once per year. So it's useful to build yourself a property appraisal template, just like we've done in front of you, so you never forget to include any of these costs. The next one then is chasing paper returns. And this is a really, really good one. If you've not heard it before, then listen into this one. When we started buying houses 10 years ago, we were trying to maximize yields. And we're doing this by buying cheap houses and renting them out to tenants that would pay the most money. And of course, this is the holy grail. This is what everybody's looking to do. At the time, the government rates for housing benefit tenants were much higher than they were for private tenants. And so we rented their properties to benefit tenants. We purchased about 10 properties or so, and most of them were like the property you have on the left-hand side, which is what they call a back-to-back street-lined terrace without a garden. So on the left-hand side, you can see there doesn't seem to be a garden anywhere around that property. There isn't a garden to the back of it either. There might be a yard to the back of it, which is kind of concrete or slabs behind it, but a very small one. And then a back-to-back, this particular property being a back-to-back terrace rather than a through terrace, means that on the back of this house, there's another house facing the opposite direction. So this is a back-to-back terrace. It's also a street-lined terrace because, as you can see, you come out of the house and you're pretty much onto the road where cars park. So there's a small pavement and then you're onto the road. There's no front yard or front garden in the front. While these properties that we bought did rent out, we found that we ended up renting to lower quality tenants, surprise, surprise, and we were constantly had issues with tenants not paying on time, or of course, in some instances, not paying at all. And as well as that, we had high repair costs, and there were months when the property was not rented because we were redecorating or fixing issues in the property. So our actual returns were actually much lower than we initially illustrated on the previous deal sheet because ultimately we bought the wrong property in the wrong area and rented it to the wrong types of tenants. Over time, our model has switched to a nicer semi-detached property with gardens like the one that you can see on the right-hand side over here as well. This is one that we recently completed on, and this is before we've done the refurb to it, which is why the garden's looking a little bit messy. And in these kind of properties, what we tend to get is better quality tenants because obviously we're buying them in better quality areas. And the better quality tenants, guess what? They pay on time, they don't cause too much hassle, and it ends up being exactly what we wanted in the first place, which is a hassle-free, hands-free, passive investment. Now, of course, to buy the property that we have on the right, it looks a lot better, but they also are a little bit more expensive. So the returns are a little bit lower. The rental yields in this case. But if I asked you right now, which would you prefer? I want you to type in the chat box, A, if you'd prefer better returns, but more hassle and more risk, or B, if you'd prefer slightly lower yields, but less hassle and much less risk. Can you type A or B into the chat box now? Perfect. Right. We're all in the same boat then. So we want lower hassle, lower risk, especially if these properties are far away from where we live, especially if it's the first buy-to-let property that we're owning. We just don't want to have to deal with all of the things that could come up. So A, like I said, is better returns from a yield perspective because the house prices are cheaper, but there will be more hassle and more risk. And B, which is the right-hand side, which is what most people on this call are looking for, is slightly lower yield, but less hassle and much less risk. So you want to make sure that your actual returns are much more in line with what you expected on the property appraisal. And can you see how the actual returns on the property on the right-hand side, the one that's lower hassle and lower risk, is going to be much more like the one that we wanted on the that we illustrated on the property appraisal? Can you type in yes into the chat box if you understand what I'm talking about? And type no if you want me to explain it a bit better. Fantastic. Perfect. The next one is chasing yields. And this is a similar sort of principle. A lot of people only consider the gross yield when they're measuring the returns, but this is only just half the story. And here is a picture to tell you 1,000 words. In this picture, you will see the impact of holding the example property that we just talked about for a 10-year period. And what you will see is that on the rental side, on the cash flow side, you're making an annual profit of £2,878. And over a 10-year period, that equates to a gain of £28,780. So just shy of £30,000 over a 10-year period. That's on the rental cash flow. However, on the capital side, which is the increase in the value of the property, we expect that £160,000 property to increase in value in the region of 10% per annum. And if that does happen, then it means that in year 10, the property is going to be worth about £320,000. Now, that's always nice because now you know that on the capital side, whilst on the cash flow and the yield side, you've made about £30,000, you've made £160,000 on the capital side. Who can see where I'm going here? Between 60 and 90% of the overall value gain will come from the capital growth. And in this example, it will be as much as £160,000. So you really need to ensure that you're buying the right property in the right area and you're not just chasing rental yield. This is a really important point. And if there was one thing that I wish I knew when I first started buying properties, it would be this one. It would be to take advantage and to take into account the type of property that I'm buying, because some properties will get a lot higher capital growth than other properties. And if we go back to why that is, let's just look at the property that I showed you there on the right-hand side, the nicer property, less risk, and slightly lower yield. The reason why that one does better from a capital perspective is because it's an aspirational area. People want to live there. People want their kids to be in that area. It's a nice, safe neighborhood. It's got good schools in the area. And obviously, as a result of people wanting to live there, when they want to buy houses, they might decide to bid emotionally. So the house is on the market for £160,000. Well, what's an extra £1,000? They'll bid 161,000. The next person will bid 162,000. And before you know it, those prices run away. The opposite happens in the lower quality area. And the reason why is because in those lower quality areas, the only people that are buying those properties is landlords. And this is also true for student accommodation and HMOs. Because landlords are buying those properties, there's only one reason that those house prices will go up in price. And that's because the yields are increasing. And the reason why the yields increase is because the rents increase. So the only reason that the house prices will increase in those areas is as the rents increase, and that will be the extent to which they increase. Whereas in the nicer quality areas, house prices can increase independently of the rent. To take it one step further in this example, we said that your initial investment was £58,050. So your £58,050 is now worth £188,780. And that more than triples your money over 10 years. And this is the power of capital growth. Does that make sense? Just type yes in the chat box if you follow what I'm saying on that point. Perfect. The next mistake to avoid is not doing the 4 main checks. When you buy property, these are the 4 things that cost the most amount of money to fix. Can you type into the chat box what you think they are? What are the 4 things that cost the most amount of money to fix in a property? Give me a couple of examples. Yep, absolutely. So we've got boiler, a couple of people saying boiler, some mold and damp, definitely. Some structural issues there, absolutely. There's a couple that we're missing. Let me take you through them. So some people said the boiler, but let me take you through these in the order that I've got them, just to make it easier. The first top left-hand corner is the roof. Roofs are really expensive, and someone's just put kitchen, but roofs are way more expensive than kitchens are, depending on where you buy your kitchens for. And the problem with roofs is that they're really far up, and it's really difficult to get a good view of whether it's in good order or not in good order. Now, the picture that I've put up here in front of you you can almost see the roof that is on the left-hand side, which is a red roof, and the roof that's on the right-hand side, which is a slightly older roof. There's nothing wrong with that older roof. It's just a slightly older roof. And if there's no leaks with that property, then there's no need to replace the roof. However, the fact that a roof on this street has already been replaced, you've got to bear in mind that all of these properties were all built around the same time. So if the roof on one property it needs to be replaced, it's probably likely that the roofs on all the properties will need to be replaced over the next 5 or 6 years. Going clockwise, then we have the electrics. Electrics can be quite costly, especially when you start to factor in the fact that you might have to rewire a property, and not just rewire it, you'll then have to redecorate it after you've rewired it. It's really important that we get electric checks done before you actually complete on the property. And as part of our service, we always get a gas and an electric certificate completed before the completion takes place. The next one, bottom of electrics, we've got, there's a picture of a plumber, of a boiler there, but this picture is supposed to represent the plumbing and the heating. And this includes the boiler, it may include a compression tank, it includes all of the copper work that's required, radiators, etc. All of these things can be quite costly, especially if you have to put them all in from new. And again, just like the electrics, it's not just the cost of putting them in, it's the cost of lifting up the old floors and then putting them in and then having to relay the floors and redecorate the property. And then on the left-hand side of that one, so underneath the roof picture, we've got damp issues. So this is damp, and something for you guys to be aware of is this is slightly different, actually quite different from mold. Mold is where you see discoloration. So it's typically black in color, and mold typically appears in corners of houses, whether it's the top corner or the bottom corner. And it's usually where there's just not a huge amount of air movement. So what you want to think about is houses these days, with double glazing and the need to be more energy efficient. What they're doing is they're stopping the air flow from getting into the property, or in the other case, stopping the heat from escaping from the property. And by sealing up all the gaps, it means that the air has nowhere to go. So if there's air that's in the property, and let's say you're cooking and you're washing and you're drying your clothes in the house, all of that moisture is going to basically settle at the place where there's the least amount of movement of air. And in these kind of instances, it will be somewhere like behind your TV or the corner of a room that doesn't usually get used. That's a different issue from this one. This is a damp issue. Mold occurs because of moisture in the air and because of condensation, and it's actually quite easy to fix. Frankly, you can do it with a cloth and fairy liquid. And if you get severe mold, again, not that difficult to fix. When it comes to damp issues, on the other hand, it can be very severe. And with damp issues, the first thing we've got to do is to really identify, why is there damp? Where is that damp coming from? In some instances, the damp will be coming from the ground. So like in this instance, you can see it comes from the ground upwards. And if it's coming from the ground upwards, it's usually rising damp. And that's because the ground, obviously being underground and being subterranean, has a lot of moisture in it. And that moisture comes straight up the walls. The other kinds of damp that you get is, let's say, above a curtain line, or at the top corners of, not top corners, tops of rooms near the window. And the reason why you typically get that maybe is because you have gutters that are leaking, and that's leaking into properties. So it's really important to try and identify the cause of the damp before you start to fix the damp. So the point to note here is that it's really difficult to check all of these 4 items thoroughly, as well as all of the other property and the aesthetics of the property, when you only get 15 or 20 minutes to view a property. So you need to make sure that you do these checks before you buy the house, because ultimately, if you don't, then this could easily cost you another 15 or 20,000 pounds on top of the refurb estimate that you already have for the aesthetics. We've actually had a number of issues in the early days when we were initially purchasing properties, where the lights in a property are working and they'll be working fine. But on further inspection, when we tried to get an electric test done, this is after we purchased the property needed to be completely rewired. Or another example would be where the roof looked fine from the outside when we're looking at it from ground level, but we later find out that there's a leak in the property. So all of these things need to be checked out properly before you actually purchase the property. And unfortunately, as I've just said, you can't always rely on your own eyesight because you might not be able to see it. And you may not even be able to rely on the survey report either, because at the end of the day, a surveyor in their report will clearly state the limitations of their report. So for example, they'll say, yes, it all looks fine, but just note that I've not been able to get into the loft to assess the roof structure. Or they'll say, oh, it looks fine, but just note that obviously I've not been able to get behind the electric sockets and switches to test the electrical wiring. So you need to be careful and make sure that you understand the limitations of survey reports. This is quite a major one. So who gets what I'm saying? Can you type yes in the chat box if you are following me so far? Perfect. And I can see we've got quite a few people that are eating their dinner probably. Can you guys who are eating your dinner also type yes in the chat box if you follow me? Excellent. Perfect. Another one to look out for is, and this is a mistake that we made quite a few times in the beginning, is ignoring untidy neighbors. When you're buying, especially if you're buying in these lower quality areas, while the property that you're buying might have fantastic pictures from the agent, and obviously the pictures are taken from a specific angle to avoid any unsightly scenes, when you actually view the property, you may discover the reason why the property is selling for slightly cheaper than other properties on the road, and that's because it may have issues like this. So whether you have messy or even aggressive neighbours, this can seriously impact finding a tenant for your own property. I mean, just think about yourselves. Would you want to live next to anything that looks like this? And the first picture over here on the left-hand side is obviously in the front of the house, and you'd be able to see that quite obviously. The second picture on the right-hand side could be at the back of the house, and that's a lot less obvious to see when you're looking at a property. And the problem with these kind of properties is that if the neighbor actually owns the property, then you don't really have a huge amount of recourse because they're not, causing any kind of nuisance to anybody but themselves. So in these kind of instances, it definitely pays to be cautious on your properties. Now, this one is a new one that has been catching people out recently, and it's forgetting to include licensing costs. So following the popularity of HMO licensing as a way of generating additional income for councils, some local authorities have now succeeded in implementing selective licensing to police rental properties. And when I say some, I actually mean quite a few of them. Most local authorities have cottoned on to the fact that this is a great way to make an additional income stream. So while all landlords within a selective licensing area have to get a license by law, it's no surprise that the cost of the license is a little bit exorbitant. In Leeds and Sheffield, for example, the license is just under £1,000, and it has to be renewed every 5 years. So every 5 years, you're going to incur that £1,000 cost. Has anyone else come across this kind of selective licensing in the past? Can you just type yes in the chat box if you've heard about this? This is not HMO licensing, this is selective licensing for buy-to-let properties. Cool, not many people then. And this one, like some people on this call will already know about this, and some of you will already have been, I don't want to say burnt by this, but you won't have known this when you perhaps purchased one of these properties before. This is investing in leasehold flats. This should be an obvious one, but it's often overlooked. And here is a statistic that I think will blow your mind. The average growth on freehold property in Leeds and Sheffield since the year 2000 has been 13% per annum. That's 286% growth over the last 22 years. I just want you to take that in for a second. Every single year for the last 22 years, if we average it out, it's been a 13% per annum growth. Can you guess how much the average annual growth in leasehold flats in the same area over the same time period has been? So what I want you to do is in the chat box, type 3 if you think that it's been 3% per year, type 6 if you think it's 6% a year, and type 10 if you think it's 10% a year. So like I said, in freehold properties in Leeds and Sheffield over the last 22 years, it's been 13% per annum. How much has it been in leasehold flats in the same area in the same time period? 3%, 6%, or 10%? Yeah, that's absolutely right. It's shocking, but the answer is 3%. That's 66% in the last 22 years compared to 286% for freehold properties. That's a big difference. Now, of course, these are specifically short 125-year leases or 99-year leases, not the longer 999-year leases. So in some of the places that we buy in, for example, a lot of the housing stock is the 999-year leases, but they're not, they effectively act as what they're called is virtual freehold. They're called virtual freehold because they are virtually freehold. No one's going to live 999 years. And as a result, if you own a 999-year lease, then you're probably going to be all right. And they perform from a house price perspective the same as freehold. The ones that I'm talking about here are the 125-year leases or the 99-year leases that you get on some freehold, some leasehold flats like you see in the picture in front of you. So you need to do your research before you buy. Buying new build property, again, another interesting one is buying new build property. Now, on one hand, these are obviously brand new, they look fantastic, they've got all the mod cons, they've got parking, they're in great areas and all of that stuff. But on the other hand, they do have some downsides. New build properties are usually, and I'm sure you guys know this, smaller in size. They have hollow walls. They're not, built the same way that they used to build them. And importantly, they carry a virgin premium. And what that means is there's a premium price because they're new. And what I want you to do here is just think of the price of a brand new car versus one that's just 6 months old. It's a lot cheaper to buy one that's 6 months old. And it's just because it doesn't have the virgin premium on it, the one that says, I bought it and I drove it off the showroom. As well as that, new builds are notorious for delays, which means that your money is not working for you. And in some cases, you might even be buying off-plan properties, which is risky because you're actually investing in a development company instead of purchasing a physical asset. I'm going to come on to that development company one in a second because I think that's almost a separate point here. But in terms of the new build property, imagine that you secure your place in buying a new build property and they say, yep, it's fantastic. It's going to be ready for you. It's May right now. It's going to be ready for you in October. That's brilliant. And then what happens, it comes to October and there've been delays in, whether it's delays in staff or delays in contractors, delays in materials, delays in conveyancing, whatever it is. But the point is, instead of completing in October, it now becomes February, March, April, and who knows how long it's going to take to resolve. So that whole time, whilst that money is sitting around, it means the money is not working for you and it's just sitting around in your bank account, losing value every single day because of inflation. And then moving on to the investing in an off-plan property, what you're doing there is that rather than putting your money into an asset that already exists, you're actually investing it in the ability of this development company. You're giving the money to this development company and hoping that they're going to build this property and hoping that it works out. Now, of course, unlike investing in an asset that already exists, here you've given them your money. And if there is some issues and challenges in the system, so let's say in the economy, so let's say, for example, we had Brexit and then we had COVID and then we had all of these changes and challenges, it may well mean that some of these developers go bust. And I know a couple of developers myself that have gone bust. And what happens when they go bust is they take your money and there is no protection against that. So you have to be really careful of this. If they take a deposit up front and that goes to them, then you could end up losing that deposit. And here's an example of one of our clients from last year. He said, I'm so glad we chose your service. My brother invested in a new build in Manchester, and 18 months later, he's still waiting for the keys. So who understands what I'm saying? Can you type yes in the chat box if you're following me on this particular point? Perfect. There's obviously a few other things as well, things like Japanese knotweed, unadopted roads, and even radon gas in a couple of areas that I just couldn't fit into the presentation because I'm trying to keep it short. But now you know the main mistakes to avoid when investing in property. So the question is, now that you know all of that, what's stopping you? What's stopping you from buying your first buy-to-let property? And the fact is that most people are just too busy with life to do all the legwork to find a property, do it up, and then rent it out. Or maybe you're a total beginner and you just don't know which property to pick, at what price, how much to spend on the refurb, and when and who to rent the property out to. Maybe the house prices in your area are just too expensive and you don't have anyone that can help you invest outside your own area. And for some people, they just don't want to risk making mistakes and losing money as a result of it. As we know in property, when you lose money, it could be quite a lot of money. The process of investing is long and cumbersome and requires a lot of experience, good partners, and some luck to ensure success. And this is the main message that I'm trying to get across, which some of you will know already. And that's actually where we come in. Now, I'm just going to tell you a little bit about us, and then I've got a little gift for you. So it's not a long bit. We're a fully accredited portfolio building company, and we help clients create financial security and independence by investing in sustainable buy-to-let properties in the North. We have a proven track record and a proven system to guarantee success and do all of the legwork to set it up so you can just sit back and enjoy the returns. And last year, we actually won the award for Best Customer Service and Best Property Investment Agency of the Year at the SME National Business Awards. And why do people use a done-for-you service like ours? Well, first reason is that we have the expertise and we already operate a tried and tested model. We know what we're doing, we've done it before, and we know exactly how to do it to achieve the results that you want. The second is that we have the relationships in the market, whether it's with the agents or whether it's with the tradespeople, to negotiate the best deals for our clients. The third is we do all the running around so you can focus on living your life rather than running up and down to Leeds or Cardiff or wherever it might be to invest in these properties. The fourth is that we purchased nearly 400 properties so we know how to avoid the mistakes. And the fifth is that we are a safe pair of hands, will ensure that you don't lose money. And if you want to see more, then head over to Google and have a look at our Google reviews, and you'll be able to see that we haven't to date lost any money for any of our clients. So who is this service actually for? We've created our service for busy professionals that just don't have the time, the expertise, or the inclination to do it themselves. You need to make sure you have a minimum of £65,000 per property to work with us. And this is because of the point that I mentioned to you about the hidden fees. There's lots of other things that you need to take into account, as well as the deposit. We offer rental yields of 5+% with capital growth on top of that, of course. You need to be looking to invest your funds for at least a 10-year period. And I mentioned this right in the very beginning. You need to have a long-term mindset. It may be that something comes up and you absolutely need to sell the property in 5 years' time. You obviously can. But if you're not looking to invest for a long-term period to start with, then you're probably setting yourself up for failure. And you must be someone that is looking to work with a trusted partner rather than just a supplier. Who likes the sound of that then? Perfect. At this point, if you're interested in having a chat with me, just type call into the chat box and I'll be in touch over the next couple of days. So just to summarize, investing in buy-to-let property, as I said, is long and cumbersome process, and there seems to be more snakes than ladders. The mistakes can be costly, so you need to do your research and err on the side of caution. And finally, that we offer a done-for-you service for people who want to avoid the mistakes and ensure that they just don't lose money. And before I go to questions, I did promise you a gift. So here it is. If you're interested in investing in property in 2023, we've created a short quiz that you can take. It'll probably take you less than 2 minutes to complete to see if you have what it takes to avoid the mistakes. See if you're properly clued up and you know what you're doing in order to avoid the mistakes. It will only take you 2 minutes to do. Scan the QR code and you'll be able to access that. And actually what I'm going to do as well as that is just paste the link into the chat box. There we go. The link's in the chat box, so if anyone wants to click on that, then you can do. So like I said, it only takes 2 minutes to complete, and we'll measure you against the 4 main principles of buy-to-let investing, which are the investment model, professional partners, experience and expertise, and physical and mental capacity. And at the end, you'll also get a free personalized report on what you need to do to ensure you succeed on your investment journey. So I've just posted a link on the chat box for those of you that are interested. And that's it. So thank you for listening. I hope it's been very informative for you. I'm going to take questions in a second. But before I do, we post a lot of this kind of free information on our social media. So please feel free to follow us on your preferred platforms. We've got Facebook, Instagram, LinkedIn, and Twitter as well. At the bottom, you've got my contact details as well. If you want to get in touch with me on WhatsApp, then you can. And I'll now open up the comments box for questions, if there are any. Perfect. I've got a couple that have come in on the Q&A. Give me a second. So based on your, this is a very specific question, based on your experience as well as being in touch with various workmen, how much does it cost to replace a roof, 6-meter roof? If I'm honest with you, I can't give you the answer to that because it depends on how high the roof is. It depends on where the roof is. You know, if we're looking to do works in London, it might be a bit more expensive than if we're looking to do works in Leeds. And also, of course, it depends on whether we're looking at 2-story or 3-story, and also whether it's a semi-detached roof or a back-to-back terrace roof. But they do range ultimately between, say, £3,000 and £10,000, something like that. Another question is from Sunil. So what other strategies can we use to invest in properties? Sure. So I mentioned at the beginning that there's strategies such as HMOs, service accommodation, etc. But as I said earlier, that they do require a bit more active management. So you need to be involved on probably a daily basis, if not a weekly basis. So you just need to decide whether you want to be active management or whether you want a sort of passive income stream, a passive investment that's going to grow in the background while you work. Okay, Mala has said, we only want to tie up our funds for 5 years or so until our daughter gets married. Is property the right investment for us? So as I just mentioned there, I think firstly, I'm not a financial advisor, but in my opinion, if you're not looking to invest for a minimum of a 10-year period, then property probably isn't the right investment for you. And the reason why is because, as I mentioned there, the hidden costs. There's so many additional costs with investing in property. And as a result, it takes some time to amortize those costs over the period that you're investing. So if you're only doing it for 5 years, it's going to be a higher cost per annum. And I can't advise you, but I don't think it's the right thing to do. Niraj says, are there any other costs that are not included in the example? Yes, great question. So there's in the property appraisal that I showed you earlier, there's a couple of costs that are not included in that example. The first is utilities. So when you exchange on the property, you'll have to, and complete on the property, you own the property, you'll have to start paying the utilities. So that's the council tax, the gas, the electric, the water, etc. Those costs depend on how long that property is vacant for before you rent it. So if there's already a tenant in there, then you have none of those costs. If the property is in a great condition and the tenant can move in the next day, then again you have very little of those costs. If you have to do a 3-month renovation to the property before you move the tenants in, then you're going to have 3 months of those costs. Now, usually, it's not that much. We're talking about council tax, maybe £100 a month, something like that. Your gas, electric, and water, maybe about £150 a month. So it's not going to, kill the budget, but it is something that you need to take into account. The other one is tax. So tax is not included in those numbers. Obviously, everybody has a different tax situation. And if you're buying in a limited company, your tax is going to be different to if you're buying in your personal name. And again, as part of our service, we put you in touch with our mortgage advisor, our accountant initially, before the mortgage advisor, who will give you that tax advice for you to decide which one is most tax effective for you. But tax, just like it is in any other investment, tax is not included because your tax circumstances will vary. Next question, the next point is around accountancy costs. So again, if you're buying a limited company, you may have to do annual accounts. Even if you're not buying a limited company, you'll have to do property accounts for your personal tax returns. And all of those costs, they vary depending on which structure you're purchasing in. Some people just do their property returns themselves. So depending on how you do it, those costs are also not included. Our accountants charges about £500–600, so it's not a huge cost, but there is a cost to take into account. And of course, that's why we try to encourage people to buy a portfolio of properties rather than just one property. If you bought one property and it made £3,000 profit, and you've got to pay £500 of that to the accountancy company, then that's quite a big chunk. Whereas if you've got 10 properties and you made instead of £3,000 profit, you made £30,000 profit, and you've got to pay £700 for the accountancy company, it's a much better situation. Sham says, how much does it typically cost in terms of fees when buying the property? What is the ongoing maintenance charges? 5% yield is net or gross. So how much does it cost in terms of fees when buying the property? So I've been through that, I think, on the slide that I showed you, the hidden fees in there. Of course, that is if you do it yourself. If you use a company like ours, a done-for-you service, then we have different fees depending on the number of properties that you buy. If you go into our website, www.lifestylepropertypeople.co.uk, and you click on the tab that says the numbers, and you scroll down, it's got a list of our fees. We've got 3 different packages: a 1-property, a 3-property, and a 5-property package. The 3-property package is the most popular, and of course, the more properties you buy, the cheaper the fee becomes. What is the ongoing maintenance charges? So there are no ongoing maintenance charges because it just, as I said earlier, what we do, because we do a refurb on all the properties, we just tell the client to keep £1,000 contingency on the side. There's no fixed amount that is being charged for every single property by, for example, the letting agent. Neil says, in your experience, what is the typical time a property is in void? Great question. So really, we have, this really depends on what strategy you're choosing and also which tenants that you're going to get into your property. The reason why we like the idea of getting a family into the property is for 3 reasons. The first is you have 2 income streams, let's say the mum and the dad. And as a result, if one person has some challenges with their income, the other person's income is always available to pay the rent. And because rent is one of those things that, you pay first kind of thing, likelihood is that when you have 2 income streams, you're going to be much more secure than if you just had the 1 income stream. The second reason why we like families is because a family usually has a child. And as soon as you have, for those of you on this call who have children, you'll know that as soon as you have a child, you automatically become more responsible for most people. And as a result, our tenants tend to be more responsible than if you don't have a child. And the third thing is that the child will usually go to a local school. And if the child goes to a local school, the parents probably don't want to move that child out of that school between the school year, for example. So usually we tend to have tenants in, I think average tenancy is probably about 3.5, 4 years, something like that. Families can tend to stay for 5, 6, 7 years, depending on their circumstances. So as a result, in terms of what is the void, the time that the property is in void, in an average year, you probably wouldn't find that the property is in void because you have a family that's going to stay for a number of years. Mira says, what is Japanese knotweed? Very good question. Let me just see if I've got a a slide for it. Do I have a slide? No, I don't have a slide for it. So Japanese knotweed is an invasive plant, and it looks just like any other plant in your garden if you don't know to the untrained eye. But what it does is it erodes your foundations. It erodes the foundations of the house, which means that it causes structural issues in the house. The challenge with Japanese knotweed is for the majority of us, we don't know to look for it. That's the first thing. And secondly, we don't, even if we know to look for it, we don't even know what it looks like. It just looks the same as all the other plants. So unless you have a trained eye and you know what you're looking for, you could end up purchasing a property that has Japanese knotweed. And if you do that, you might find that you one, have structural issues in your property down the line, and secondly, you in the future you may not actually be able to get a mortgage on the property because not all lenders will lend in those kind of circumstances. Obviously, you know, they're going to lend against a property that's going to have structural issues, probably not the best thing to lend on. Nikki says, isn't selective licensing the same as HMO licensing? No. So HMO licensing is basically, the reason why they introduced HMO licensing was to control the saturation of an area in HMOs, to make sure basically there's not too many HMOs in an area. For those of you who don't know, by the way, HMO is house of multiple occupancy. The easiest way to think about this is a student house. So if you have a student house, you know, you don't want to have loads and loads of student houses and no family houses. So what they want to do in these areas is control the number of student houses that they have. And that's why they introduced HMO licensing. Selective licensing, the only reason that I can really think of it is to collect revenue ultimately. Like there's no actual reason that I can understand why they are charging people to rent out their own properties, except for the fact that the council want a piece of the pie. And there are different councils and they all have different charges and they all police them differently as well. But if your council or if the area that you're looking in does have a selective license, I would highly recommend paying the selective license, because if you don't, then you know it could come back to bite you quite hard. Another Neil now says, I have the opportunity to invest with a developer for a fixed guaranteed return, he tells me. What are the pros and cons of this? So as I've said just a couple of seconds ago, be really careful of this. And the reason why I'm laboring the point on this particular one is because I myself in 2018, I think it was, I lost a huge amount of money, because I invested in one of these schemes with a developer. I thought that I was buying a property, but it turns out I was not. As I said earlier, instead of you're not putting your money into an asset. What you're actually doing is investing in the ability of the development company to develop out a project, to build a bunch of houses. And in that time, I think it was just when Brexit was happening or something like that, obviously the market fell and everything went sideways. And ultimately that developer couldn't afford to keep building the project and to keep paying everyone their interest. And so they just ended up going bust. It's a much higher risk investment than the type of properties that we're talking about today. And if I'm honest with you, I feel that those kind of investments shouldn't be open to the general public. I think that they're very risky and you need to be very, very careful of that. The pros are that the returns in the short term are better. So I think there was a lady called Mala who asked about, what if I want to have my property, my money back within 5 years? This kind of scheme may be right for you, again, depending on what your other circumstances are, whether you have the money to lose, etc. But I would say that this is probably not for the general public. In the short term, the returns are better, but the cons are, number one, you have to keep investing your money. So it's not just a case of you put it in and you forget about it and it will grow, because you don't actually own the property. You're basically investing in the developer. When they're finished with the project and they sell the properties, they give you your money back. The second is that you don't get the capital growth because you don't own the property. And the third thing is that it's much more risky, as I mentioned earlier. So I'm not a financial advisor, but it's just not something that I would recommend. Remember, and here's a thing that people should remember, higher return equals higher risk. If you want a higher return, people tell me all the time when I ask them the question of what kind of return are you looking to achieve when you're investing in buy-to-let property? And they say, oh, well, as high as possible. And I always say to them, I don't think that's correct, because a higher return means there's a higher risk. There is a one-to-one correlation between risk and return. In fact, probably an exponential correlation. So that means that the more return you get, the exponential your risk becomes. In this instance, you have to understand that higher return equals higher risk. And everyone, I've heard this so many times, oh, I'm willing to take the risk. Everyone is willing to take the risk until they lose their money. And I was one of those people as well. I was like, oh, don't worry about it. I'm happy to take the risk until I lost my money. And I realized that it's really hard losing money that you've worked really hard for, which I'm sure is the position for most of you guys on this call. Anjali says, your target families, sorry, as you target families for tenants, do you sort schools near, do you look for properties near great schools basically? And hence these properties are more expensive. Yes, we look for properties that are near great schools. And I don't think that the properties are more expensive. Well, I was going to say the properties are more expensive. The properties are more expensive because of the area that we're looking in. I guess that a factor in that is that it's got good schools in that area. So probably yes is the answer. But yeah, you have to accept if you're buying properties in an area that people want to be in, then you're going to have a slightly higher cost. Another question. I'm going to wrap up after this one. So are there additional surveys needed for roofs, wiring, damp, extra cost? Great question. This one, Shrutin. So the answer is no. So we do a condition survey, which kind of covers all of those places. Yes, there will be limitations to that survey. They say we can't see behind the bits and bobs. We do always do, I mentioned earlier, a gas test and an electric test. Those, while they're at extra cost, we would have to do those to rent that property out anyway. So effectively what we're doing is we're getting the gas test and the electric test in the hope that either there's no issues or there's issues, but we can fix them within the original refurb budget. Or thirdly, if there are major issues, that we can then go and renegotiate the price with the seller. So yes, and how much do those cost? So electric test might cost £150, a gas test less than £100. You know, £250 in total is not a huge amount of money to pay, but it means that we get those tests done before the property is rented. The roof and the damp is covered a lot by the survey, but like I said, we need to be careful about what their limitations are. And in general, our viewers are quite experienced, so they can see these things coming. There has been there was an instance very recently where a client came back to us because the letting agent gave them a bill for £5,500 plus VAT, about 7,000 something pounds for damp that was reported at the property by the tenant. And so the letting agent sent out a contractor. The contractor came out and he quoted them the £7,000 fee. Obviously, the client then got back in touch with us and said, "Hey, look, I've only just bought this property 4 years ago from you, and now I've got this £7,000 damp works. Can you help?" So what we did, of course, at no cost to them, was we sent our project manager to the property because we do all of these checks on your behalf anyway. And so we were very surprised that these things came up. There was no mention of it on the survey. We checked through the survey from 4 years ago, no mention of it. So we sent our project manager out. He went to have a look at it. And this is the key to knowing what you're talking about. It ended up being condensation, not damp. Condensation is the black mold that you see. It can be cleared quite quickly, quite easily. We also installed some trickle vents in that property, which are the vents that go at the top of your windows to get the air flowing through. And we also installed a couple of air bricks in the property as well, again, to get the ventilation into that property. And all of that cost about £480, so not a huge amount of money in the grand scheme of things. Nothing compared to £7,500 bill. And that's all been done and dusted, and there's no issues at the property. And we've managed to rent the property out now for about £200 more than we did 2 or 3 years ago. So yeah, one thing that we have to know is that issues do come up. This is not buying stocks and shares where you buy it and then you don't touch it ever again. This is a property. People are going to live in this property, and as a result, from time to time, the door handle is going to break, the window handle is going to break, the radio needs to be bled. All of these small things will come up, but they're very small in the grand scheme of things. When I say the grand scheme of things, if you remember my earlier slide where I said the £58,000 investment has created a value of £188,000. If we've got to do £480 worth of work once every couple of years, let's say, for the sake of argument, let's say every 2 years. So every every 4 years is going to be £1,000. Over a 10-year period, we're looking at £2,500. Let's call it £5,000. Even if it's £5,000, if I've tripled my money over that time period, I'm not really that concerned about the fact that I've had to pay this additional amount. And more importantly, the reason why most of you on this call and also most of our clients will be looking to invest in property is because you already probably have pensions through your companies. You probably already have ISAs that you invest in, or you think that the stock market is risky. Whichever one of those it is, the point is you want to diversify your portfolio, and you already think that property is the way to go. I'm going to call it a day there because I've been on for an hour now. So if there's any final questions, then feel free. In fact, I'll go to the next slide with my contact details on it. Feel free to WhatsApp me. I'm more than happy to have a chat with anyone who wants to talk about anything that I've spoken about today. Otherwise, we need to wrap up. Here's my contact details. Get in touch with us, like us, follow us. And thanks again for joining me. And I will see you again soon. Thank you very much.